Late last year, news outlets reported that the country's financial regulator is planning to unveil a regulatory framework covering cryptocurrencies early next year to help protect vulnerable members of the society from highly risky assets. Various jurisdictions have taken different approaches on how to regulate their crypto industry. For more on what the local regulations could look like, we are joined by Wiehann Olivier, who is a digital asset lead and partner at Mazars South Africa. Wiehann, thank you so much for your time. Let's start off with where we're sitting right now when it comes to the debate around whether we regulate crypto or we don't.
Yeah, sure. I think we first need to understand where Bitcoin and cryptocurrency comes from and where this idea of regulations come from. So in 2009, Bitcoin's white paper was released, and in the white paper, it essentially put out the idea that Bitcoin was created to facilitate peer-to-peer transactions over the internet without the need for an intermediary. Now, without the need for an intermediary didn't necessarily mean for the need without regulations. Now, therefore, regulations in South Africa and across the world has become a heavily debated topic. So if we look around the world at the different ways these countries have decided to implement regulations, which is quite interesting. So if we look at China, China essentially said there's a blanket ban on cryptocurrencies, meaning that you're not allowed to transact with crypto or mine crypto in China. Then if we look at the likes of the United States, in the United States, specifically looking at the state of New York, they issued a legislation there called the BIT license, and they issued this legislation without getting a proper understanding of cryptocurrencies and the impact it has on the economy. Now, fast forward to today, most virtual asset service providers doing business in the United States try to stay away from the state of New York, specifically because of the cumbersome laws and regulations there. But if we look at the United Kingdom, they followed an approach where they first wanted to obtain an understanding on the technology and understanding on cryptocurrency to see what the impact is going to be on the fiscal, the monetary policies, and the economy. And from there, they designed laws and regulations to basically facilitate all of this. Now, South Africa, to a certain extent, have followed the exact same approach because it wasn't banned, but there wasn't regulations put in place from the get-go. Now, in the same breath, we also need to look at the technology as a whole. It's extremely difficult to regulate this technology because of the way that it moves. It's an ever-evolving technology that causes some issues from, if we look at now in the history, that from a SARS perspective or exchange control perspective, this new asset class was dropped into regulations without being amended, and it can't necessarily be amended immediately because of the technical side of cryptocurrencies as a whole.
So, I mean, I suppose... Sorry to interject there, but I suppose it's a fine line because on the one hand, you want to regulate in order for, more members of society to participate and trust the industry. But on the other hand, you don't want to have too much regulation to stifle, innovation, etc.
So you're 100% correct. And I believe the industry should be regulated for two specific reasons. The one being to create a safer environment for investors and to also provide them with recourse should their funds be misappropriated or they should be subjected to fraud or something of that sort. And regulations will also aid for mass adoption of cryptocurrencies that would significantly or essentially increase new subsectors and new products being brought out where cryptocurrency is used, and also for normal businesses to integrate cryptocurrency into their day-to-day operations and remove some of the friction caused by the normal banking system and the more normal payment system and just make them more efficient from that perspective.
So, I mean, what does it mean for those who are also known as, VAPs in that particular space?
Yeah, so there's two main aspects to consider here for virtual asset service providers and the customers of virtual asset service providers being the investors. So regulations, as I mentioned, it'll assist with the mass adoption and create an opportunity for legacy businesses to incorporate crypto into their day-to-day operation. But it also creates almost a new subsector. So it creates an opportunity where we can create funds or structures of listed securities, such as exchange-traded funds that we saw in the US and in Canada, and basically open this market where you've got a vehicle that holds cryptocurrency as its underlying assets. Now, of course, it opens up the market for decentralized finance, which is essentially decentralized lending and borrowing applications, to incorporate payment railways into normal businesses once it's regulated. And of course, one of the big advantages is remittances and cross-border transactions. Once regulated, this can be used in the normal day-to-day businesses. And of course, regulating cryptocurrencies means regulating non-fungible tokens as well. At the end of last year, there was a massive hype surrounding non-fungible tokens. And this paves essentially the way for tokenized assets, where we can essentially have portions of real-world assets that ownership is sitting on the blockchain and held securely on the blockchain. So essentially what blockchain is trying to achieve here, it's trying to do to finance as what the internet did to information. So with the internet, information was able to move freely around the world. And the same applies to blockchain. Blockchain facilitates this process where finance and real world assets can move freely over the internet.
Before I let you go, we've got the finance budget that will be delivered in February. What's at least the one key thing you're hoping to hear around, cryptocurrencies, etc.?
I think the one key thing that we all are looking for is more clarity. Because at current, as businesses operate from South Africa, they are already incorporated companies in South Africa. So there's a variety of laws and regulations that they already need to adhere to, from a VAT, a income tax, a tax administration, a Companies Act, exchange control. So there's a lot of these already preset laws and regulations that were created before the days of cryptocurrencies. And trying to fit this new asset class into the current legislation is extremely difficult. So I'd like to see more guidance from regulators in terms of how cryptocurrency fits into this, but also making it more user-friendly and to encourage this innovation that we've seen in South Africa. Because in South Africa, we are truly spoiled with the virtual asset service providers that we currently have in our country, and their views on regulations. They are extremely pro-regulations. They just want, not, as you mentioned, they don't want to be stifled whatsoever by current laws and regulations or new laws and regulations being imposed.
Wiehann, let's leave it there. Thank you so much for your time. That is Wiehann Olivier, who's the digital lead at Mazars South Africa. We're going to take a break and we'll have your weather details after that as well. And I'll be back tomorrow with your market commentary. Nompumelo Sizeba will be taking over until 3 p.m. So stay tuned.